Good morning. Good morning, everyone. I'm Bagger Don at Stock Market Caddy. Today is Saturday morning, December 20th, approaching 11 a.m. I wanted to share something with you, and I want to share not just the result, but I want to share with you what it is. It's a trading approach, how it is put together, how our members use it, and how it might benefit you and very well change or improve your trading life. It could be just one more tool for you to implement. And by the way, I'm going to show you real time how it's positioned and where it is. But I don't want you to think that I'm cherry picking. So if you hear this message and you say, hey, Don, I would like to know if I had taken every single trade for the past year utilizing this strategy, can you tell me how much I would be up or down? Now, this, of course, would be trading a mini futures contract. If you were trading a micro futures contract, less the VX, I don't think the VIX has a micro contract. I could be wrong on that. It would be 1/10 the size. And of course, you could, when I explain how our members use this, you could use options. Okay, so what is it? We call this the Nicklaus timing model. And by the way, I'm going to resort these. I'm going to resort them. Here's the VX. The VIX is what we call the fair gauge. This is the Russell 2000 futures contract, S&P futures contract, NASDAQ futures contract, and the Dow futures contract. This is what the speculators believe that the S&P is going to do in the very near future. And if you own stocks or you own whatever it is you own and it's in the S&P, the price of your underlyings very well may be impacted, will be impacted on the result. That is the idea. Now, what we have done is to take the data stream of, I'm going to pick on the ES, the data stream of the ES, and we have it flowing into a chart. Now, it's not using moving averages and stochastics and all of that. It isn't. It is compressing an algorithm into the same that also has an algorithm running on it, comparing and contrasting the ES. And yet we're not done. We have a third data stream flowing in. That data stream is the yield on the 10-year Treasury, a pretty important market. 10-year Treasury is the biggest, deepest market in the world. When former Federal Reserve Chairman Greenspan was asked what is the one thing he looks at in the morning, he said the 10-year Treasury. This algorithm compresses all three data streams for just the ES and makes a daily decision to be either long or short. And we do this for each of these markets. We also have a dedicated algorithm running just on the VX. The VX alone. No other data stream coming in. And what we want to see is just what we see here. We want to see all four markets in the same direction. And folks, 95% of the time they are. Why is that? It's because the markets have been commoditized. They've been commoditized for decades. This notion that it's a market of stocks and you've got to have that one individual stock is, we think, folly. That's for the Jim Cramer. A rising tide will raise all boats. A lowering tide will lower all boats. If the overall markets are going down, you could have the best stock in the world and it's most likely going to go down as well. So we want to pay particular attention to the tide. And we want to see just what we see here, all four markets in one direction. In this case, they're long. We then want to see, or we could do it first with the VIX. How is the VIX positioned? Ideally, for a confirmed long position, we want to see the VIX short. It has an inverse relationship. It's a remarkable tool. It is a bet on how the speculators are positioned in the options market, which is highly leveraged and very, very influential in the short-term price action of the market. So when it's positioned this way, and let me show you, the markets all went long on the 24th. The VIX has oscillated just once, so you see it on the 18th. On the 25th, the VIX confirmed the signal and went short. From the 24th, that trade ran up close to $40,000. And then there was a pullback. And we actually got warned on a part of that pullback because the VIX actually went long. And the markets were still long. You can deduce that. When that is the case, we will report to our members that the market is neither confirmed long nor confirmed short, that it's a caution flag. And when we report on this nightly, it's a daily signal. When it's like the way that it is now, the date in the video is shrouded in green. And we show everybody this, that it's in a confirmed long position. But as you can deduce, back on the 17th, and maybe even a few days before, the VIX was long and the market was long. It was a caution, and we put out the caution flag. The date in the video was shrouded in yellow. And we told everybody our experience is that usually within 24 hours, but usually not more than 72 hours, one of two things will happen. The markets will stay long and the VIX will get short, and we can get back on our pony and go long if we choose to. Or the warning is in fact a warning, and usually within that next day, the markets will all flip short, and usually no more than 72 hours. And they'll be all red. And when that short signal is confirmed, we will let our members know. We will confirm the short signal with a red date in the video, and the video is shrouded in red. Back on the 18th, the $40,000 high watermark had pulled back where it was only up maybe $4 or $5 grand. It had in fact pulled back. But on the 18th, as hard as it would have been maybe to do, had a person, and we have members that did, got long, you would be up real time 26 grand. Again and again, we are traders. If you use micros here, you're up 1/10 the size. If you play just one market, then you would have played just one market depending upon the leverage that you put on. Or you could have used options, and you very well may be up even more if you had used options. Or we have members that use this signal as a barometer of what side of the market they want to be on. And even for long-term money, when it's in a confirmed short mode, they may relax or stop their dollar cost averaging into their retirement accounts, that sort of thing. It is a wonderful tool. And if you want to know how you would have done had you followed each one of these signals for the past year, you send me an email and I'll be happy to oblige. I am Bagger Don at Stock Market Caddy, CADDIE. We are algorithmic mechanical traders. Why? We want to minimize the emotions, our emotions, of fear and greed, and we want to maximize our time and our capital. If this appeals to you, we invite you to visit our website, sign up for free on our mailing list, and you're welcome to call any from 9 a.m. to 9 p.m. at 813-758-8263. Have a great weekend, everyone.